Yeah, I got it. I don't allow anybody to share the screen because of the problems with this situation we had a moment ago. Okay, so um, moment, I will start the session once more, and we'll see. So share screen, and I'm sharing the screen. This one, share the screen. I hope you see it. But I believe most of participants went just quitted. So I'll continue it just because I need to see if everything is working. So when we have a next webinar, it can be better made. What I also want to do is I want to manage the participants, and I'm muting at the moment all. Also, I'm going to mute all the new participants. Okay, so now I can start. Okay, so we were finishing. We stopped our session when it was we were speaking about inverted hammer. Just coming back, this was the hammer, typical hammer, bullish hammer, and it was a full body, a body with a wick here. So the inverted hammer is just something opposite to the hammer here, as you see, because the wick is on the top and the body is below. But the results are the same. It means that the inverted hammer is also a sign of that the market is gonna get bullish. So the only difference is that this wick is not at the bottom like in a normal hammer, but in the inverted hammer, it's over the body. So, and it's of course also indicates that the buying pressure is stronger than the selling pressure, and that's why the price, after being pushed down, recovers and stays over the bottom of the this candle, the former candle. And also this inverse hammer suggests that the buyers will take the control on the market and push the price higher. Another situation is, of course, this is the potential situation when you take a look at the charts, we can see that we have a move down, bearish trend. Then we see this inverted hammer at the bottom. What's important, I stress once again, it's very important that the bottom of this inverted hammer is the lowest level in this surrounding, in this environment. And then we can expect that the market will go up. It's important because when we are trading, we are just waiting for the moment to enter the market as soon as possible. And I believe that those patterns will help us to identify the moment that the market is gonna change the direction. Because when we have a downtrend, we can follow the trend, and then we need to know if we were shorting, where should we close our trades because the market's gonna turn around, or if we are not shorting, but we plan to join this instrument, we want to trade it, we need to know if the direction we want to trade can happen. And in this case, when we see such a inverted hammer, then we can say, okay, this is probably a bullish signal, so I can start trading from somewhere here. But to say the truth, this formation of two candles, because this is a single candle pattern, but it's also called those two candles together as a bullish engulfing. But what's bullish engulfing I will soon explain. This is the situation when the candle, which is the last candle, is engulfing, it's covering the one before, the preceding. And what's important in such a formation, that maximum of this bigger candle and minimum, the maximum is higher than the candle before, and minimum is lower than the candle before. This is the most important situation in engulfing pattern, because we can call it a pattern. it's formed by two candlesticks. Of course, there can be more, but the two already make two already gives us for a pattern. Two candle pattern, bullish engulfing. When this candle, this bigger candle is bullish, and the small one inside is bearish. Usually, it's of course there are some differences sometimes happen on the market, but in case of this formation, we see bullish candle, bearish candle, and this bullish is bigger than the one before. So this is a formation which I believe gives the best signals on the market. Bullish engulfing, of course, it can happen that we have a bearish engulfing when this candle is red, is bearish. And also there are inside bars, which are also very interesting patterns. Most important, maybe there'll be an opportunity next time or maybe next week. If we'll have a webinar, I will explain you how to trade such formations themselves. And this pattern belongs to the family of outside bars. Outside bars means that the following bar is bigger than the one before and is covering totally with its range the one before. So it means that this is an outside bar, in opposite to inside bar when we have a big bar and the small one is from this side. But this is another subject to discuss, to explain maybe in future. So when we see such a thing like this on a candle, on the candlesticks chart, we see that we have a green candle which is covering the one before with its range, because this is the range. The range is from the top to the minimum, the maximum to the minimum. This is the body, and this is the wick, or some call it shadows. And what's important, maximum of this candle is higher than the maximum of this one, and minimum is lower than the minimum of this candle. The difference in size is maybe not so important to call it a bullish engulfing candle, but still, if this difference is big, it means that this candle is much smaller than this one. Then we have a better situation. It means that the green, the bulls, the buyers are really stronger, much stronger than the sellers were, because red sign, red bar, bearish bar, bearish candle means that here the sellers are stronger. But when you see a big difference, it means that the buyers are definitely stronger than the sellers. Okay, so now this is a typical chart which you find on your screens when you open the Xtrader platform, the platform which is supplied by CCI Traders broker. This is what you see on your charts. Of course, sometimes you have a grid behind, but this is a clear one without the grid. And you can see the two patterns which I was showing you just a moment ago. This is the hammer. So this is this bullish hammer. Even if it's red, don't bother about it. The color, in this case, is not so important as the shape. And the shape shows us that the market was so low, but finished here. So it finished much higher than the low of this hammer. And what's important, the minimum of this hammer is a local minimum. You see no minimums on the left in the history. And the wick is longer than the body and this next wicks together also. This long wick here is a sign of that this is a hammer which can make the price grow. What's important, the wick must be long enough. Maybe this is not the best sample ever, but on the real charts, I'll show you that those things happen. They are really, really nice patterns. And here you see the bullish engulfing. The bullish engulfing pattern consists of this big candle and the smaller one here. As you see, the maximum of this candle is higher than this one, and minimum is lower than this one. Many traders call this pattern bullish engulfing or an bullish outside bar, because this bar is outside this one. What's important also, you can find in lectures that this big candle is called a mother candle of this one. So I call it a baby and a mother, and this mother candle must be bigger than this baby inside. Okay, so this is a mother candle of a bullish engulfing. And as you see, after price broke out from this bullish engulfing pattern, because pattern consists of two candles. This is the pattern, and the maximum of the pattern is the top of this green candle, and minimum of this candle is the minimum of the pattern. So when you see the price break out from such a pattern, then you have a big chance to join the market. This is a 4-hour chart. It means those are the prices. This is the picture of what market has done during 4 hours. 4 hours, 4 hours, 4 hours, 4. So let's say this about 2 days, and in 2 days you gain about 100 pips. It was a good idea to trade it. So bullish engulfing. Just I would show you, even we are speaking about bullish patterns. Take a look at this pattern here, this candle and this candle. As you see, this candle is totally engulfing the one before. So we can say that this is also an engulfing pattern. But in this case, when the candle is red, it's not a bullish engulfing, but bearish engulfing. And you see what happens when the market broke to the minimum of this mother candle, it went down. So we can trade also such patterns, but in case it's bearish, it gives a big chance that the market will fall. Here we see the same situation. A bearish candle is covering the one before. So this is a bearish engulfing in opposite to bullish, and you see the market is falling. So remember that we can have engulfing patterns, bullish and bearish. The same is with pin bars, the same as hammers, everything. It's just an opposite. The reaction of the market is just opposite to the one to the bullish. So this is how it looks on a chart. Of course, we can also take a look at another pattern. It's called morning star. The morning star pattern is considered as a sign of hope that in a downtrend bearish market, there's a hope for some bullishness. And to take a look at this, we can see those things happen. Not maybe often, but they happen. It is in case this was those were 2 candle patterns on one single pattern, 2 candle patterns, and now this one is a 3 candle pattern. So it is the one I was showing you at the beginning of the lecture. Maybe I'll come back for a moment. So we have this hammer as a single candle pattern. We have a 2 candle patterns. This is bullish engulfing. And we have a 3 candle patterns, and we will speak about this morning star and 3 white soldiers. So let's go back to the situation here. Just to go straight to the candles, I will show you how it works. So why they work maybe is also important, not only how they work. Okay. Oh, this is the situation. This is the morning star. This small candle here, we call it a morning star. What it means? Just take a look at the market from the typical mechanical point of view. The market is pushed down by the sellers. It means that the market is selling. People are selling. Then we have a strong impulsive selling. Look at the candles. Candles usually much bigger than the preceding ones. And then we have a small one. This is the morning star. It gives us a hope that this bearishness will finish and market will go bullish. And what's important in the case of this situation here is that before we see the small candle here, we see one at least big bearish candle, which shows us that it can make us, it can fool us, because when we see such a big candle, we say, they will push even more strongly down. And then you see a small one like this. When you see a small one like this, it's a first idea that probably the market will start growing. And that's what happens. But what's important in this situation, it's that the next candle, which becomes a green candle, bullish candle, it must be also an engulfing candle. So it must engulf this one. It means that when you have this morning star, this bullish candle must have its minimum below the minimum of this morning star. Then we can say this is a perfect formation, a three candle formation, which shows us that the market is a hope that the market will get bullish after such a period of bearishness. And this is those. So as I mentioned, this is a formation, a three candle formation, bearish, small spool. We call it also a spool, an indecision candle. Indecision means that the market is hesitating. Should we start follow down, or should we start growing? And then we see this big green one. When we trade it, of course, after this green candle occurs. We don't trade here because we never know if there'll be another red. But when we see a green one, which is engulfing this morning star, then from this moment on, we can start thinking about trading. Of course, stop loss must be below this candle. And this is how it happened. And then this direction is definitely through the top. So this was the morning star. And as I mentioned, this is a variation of a bullish engulfing, because take a look. Here we have also a bullish engulfing candle. See, a small one and a bigger, which is engulfing. And when we go to the morning star, those two candles are also bullish engulfing. The only difference is in case of morning star that this candle is very small and it's following after a big bearish. So this is the difference between bullish engulfing and morning star. We have here two star. In case of bullish engulfing candle only, two candle pattern, it's not so important what we saw before. But in case if we want to treat morning star as a sign of bullishness, we need big bearish candle, then a small indecision candle, and then push up. So this is the difference between morning star and the typical bullish engulfing. Here you have a sample of a morning star from a real market. It's Australian dollar to New Zealand dollar, and you see we have this strong bearish signal. Then we have this small indecision candle, a spool. Then we have a bullish candle. So those three candles, this is a pattern of a morning star. Of course, the morning star is the one here, but this is a pattern of a morning star. And then you see the market pulls up. So this was what I could say about the three pattern candle. Of course, we'll go to one more, but just a moment. I will show another sample where you see this was the morning star, and here you see a bullish engulfing once more. How it nicely works. It pushes the price up. And what's the most important thing is the moment when they break out over the maximum of this bullish engulfing candle. And stop loss must be below this pattern. In case of hammer, once again you see that the hammer mustn't be green, mustn't be bullish, because the long wick below this one is the most important thing. It shows us that there were no sellers here, only buyers. There were sellers, but the buyers very quickly pushed them up. It means that market was sold out, and now it started to grow. So this is a typical. So remember that the hammer mustn't be green to call it a bullish pin bar. The most important thing in a hammer is a long wick here on the bottom, this lower wick, because the higher wick on the top is not so important. Important is the distance, the size. It must be definitely bigger than the body and the upper wick. Lower wick is the most important. The same as in bearish pin bars, because as I mentioned, this is a hammer pin bar or bullish hammer, bullish pin bar. And here we have a bearish hammer, you see, and it's green. It's green. It looks like bullish, but no. It's the long wick or the upper wick shows us that the market is sold out. They want to push lower. No more buyers now. So it's bought out. So it's no more buyers. The buyers lost their strength because the sellers started selling and pushed the price down. So this is, yes, you see, all those pin bars really give us a big chance to predict the market. And this is what we need. We need to know, we want to know where the market's gonna go. And in this case, we can see that the market went there where we wanted to. Okay, so now let's go to 3 green soldiers. 3 green soldiers, it's very simple pattern. It means that we have 3 full body candles. Full body means that the wick, the upper wick and the lower wick, is very small. It's nearly a full body like this one. And when we see such a situation, we can expect that the market will be really bullish soon, and it could be bullish it can be bullish for a longer time. And I believe those candles, those patterns, also this is also a 3 candle pattern, and it can be very, you can spot it very quickly. Sometimes they call it 3 white soldiers because it depends on the type of candles you are using, because some traders are using black and white in case instead of red and green. It all depends on your habits, what you prefer more. I'm using black and white candles, but no problem if there's a red and green, because I also understand what's going on the market. I also see, it's not a problem for me. I believe also not a problem for you. Red is falling, green is growing, black are falling, white are growing. So green soldiers, it's one name, but also you can find 3 white soldiers, and it occurs when we have 3 bullish days, and the body of the candle must be full. The wicks must be as small as possible. The full body candle gives us an idea that the market is very, very strong. It's a really strong signal, because such a thing, when it happens on the market decides to go more bullish, to get more bullish. This is how it looks on a bigger picture. And what's more important, you see some friends here coming. So I believe that again we'll have some problems with spamming. So the 3 green shoulders, you can see how it looks like. We have 3 nearly full body candles, and then they push up. And the same happens here, 3 full body candles, and they push up. Okay, so this is what I wanted to show you regarding the most important candlestick pattern. But of course, I would like to show you some samples on live market. Just let's go to the end of our theoretical part. So I showed you the main bullish candle patterns, but you must remember that before you look at this pattern, you need to take into consideration what's happening around. It means that the pattern itself is not so important if it's not in a special position. All those patterns must occur at the bottom or at the top of a trend. So even if it's a single or two candles pattern, you must take into consideration the environment in which they occur. And this is what I would like to show you shortly on the live charts. Of course, I will just, because our show was stopped, I will just repeat once more that you have a chance for a bonus. When you start to trade, you get $50 free bonus, and you can check how the trading is going on. There's also a 50% bonus for traders who make the first deposit or replenish an account. Of course, we have also the multi-account manager, and those who would like to apply for this bonus, you need to send your application to sorry, support@ccitraders.com, and or you can do it also through the client cabinet. So so if you are interested, you can check the offer or to support or to the client cabinet if you are already logged in. So now I would say thank you, but I believe that if they won't spoil our session, let's go for a moment to live charts, because live charts give us an idea what happens really on the markets, what can we find on the markets. It's important because the theory is one thing, but I believe most important is practice. And I'm a trader, a daily trader, sometimes long term, sometimes I'm scalping. That's why I believe after we have some lecture, we need to look at the real chart. And I will try to find where is our platform. Okay, the platform is here. As you see, this is the platform. Sorry for this red line. I don't know what's from it. Probably someone tried to spoil our transmission. What more? If there will be any questions after a short introduction, after a short practical charts, we will go. If you have some questions, I will open the chat. Okay. Sorry. I'll have to drink something. One moment, please. Okay, so now we are searching for some bullish formations. Okay, we were speaking about Pinbars, we were speaking about bullish engulfing candles, and now let's take a look. Someone is playing games with us. I see. I don't know if we'll be able to show something. I will open. Let's say pound to. Someone is here. Let's take a look. What the leverage means. Leverage means that if you want to trade and buy something, you mustn't invest the whole amount you have. For the questions, so just taking it in a very simple way. If let's say you open an account with $100 and you have a leverage 1 to 500, it means that you cannot see the chat moment. I will try to mend it. Manage participants. Moment, please. I don't know how to do it, that you can have the chat opened, but because Tunde Odekoya wrote to me privately. That's maybe, yes, it's a private message. That's why you cannot see it. But Mr. Tunde asked me, can I explain what's the leverage? Okay, so the leverage, you cannot see my screen. One moment, please. To new share. Aha, sorry. I believe now you should see the screen. Okay, it's a chart of okay. So the leverage, just shortly, because about leverage you can also ask your assistants in the CCI trade room, but I will explain shortly. Leverage gives you a chance to buy more. If it's a leverage 1 to 500, you can buy 500 times more than you would buy for your money. It means that if you have $100 account, you can trade as it would be 500 times more, because if you are buying something, this is a contract for difference, you must remember. If you want to buy one lot is 100,000 pounds. So you are not able to buy with $100 500,000 pounds. But if you multiply it by time 500, you have $50,000 on your account, and you can buy 1/10 of a lot. So the leverage gives you a bigger chance to buy more, to have a bigger volume. It means that you change the volume here, so it's a half a lot, okay? But when I go down, it's a 1/10. So having a $10, having $100 on your account, you can buy at least, you can buy even 0.1 lot of instrument. But believe me, you must trade safely. So if you are a beginner and you are trying to trade, start with a demo account, because the account is a demo account gives you a chance to learn. I started with a demo account. I was trading 3 months on a demo account before I started trading with real money. And believe me, it's a better idea than trading instantly with real money. Of course, you can try a bit, but if you are trading with real money, start with the lowest possible amount. 0.001 is enough to learn.